Join me as I dive into the numbers and take on the challenge of figuring out if DNUT stock is actually a buy. DNUT stock has been making waves in the market lately, with its performance catching the attention of many investors. The buzz around it seems to be growing by the day, but the big question on everyone's mind is whether it's a good time to buy in. Investors are often faced with tough decisions when it comes to jumping into the stock market, and DNUT stock is no exception. Market volatility can be a major player in this game, making it difficult to predict how the stock will perform in the long run. Add to that the company's fundamentals. Are they strong enough to support the stock's potential growth? It's a lot to consider, and one wrong move could lead to losses. DNUT's recent stock price movements have been a rollercoaster ride, with significant fluctuations in a short period. The company's financials also come into play here. Are they healthy, or are they carrying a lot of debt? What about their revenue and profit margins? These are all important questions to ask when evaluating the potential of a stock. And then there's the industry trend. Is it a growing market, or is it declining? All these factors can impact DNUT stock performance. To get a better sense of where DNUT stock is headed, let's take a look at their recent earnings reports. Have they been meeting expectations, or have they been falling short? This can give us a clue about the company's current health and future potential. Industry trends are also worth considering. Is DNUT stock well positioned to take advantage of current market conditions? Analysts have been weighing in on DNUT stock, offering their insights and predictions. Some are optimistic, citing the company's strong fundamentals and growth potential. Others are more cautious, pointing out potential risks and challenges. According to some analysts, DNUT stock has a significant upside potential, with a possible increase in stock price in the coming months. The predictions for DNUT stock vary, but one thing is clear: it's a stock that's worth keeping an eye on. Some analysts are predicting significant growth, while others are more cautious. It's also worth considering the potential risks and challenges facing the company, such as increased competition and regulatory changes. In terms of key statistics, DNUT stock has a current price-to-earnings ratio of around 20, which is relatively high compared to its industry peers. However, the company's revenue growth has been impressive, with a 20% increase in the last quarter. So, what's the verdict on DNUT stock? It's clear that there are both pros and cons to consider. On the one hand, the company has shown strong growth potential and has a solid financial foundation. On the other hand, market volatility and potential risks are always a concern. So, what do you think? Is DNUT stock a buy? Let me know in the comments below. If you want to stay up to date on the latest stock market trends, be sure to check out my previous video on the topic.